Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Tuesday, March 10th, 2026. So pretty another volatile day today. I still get amazed at how accurate this software is right now. I'm still, like I said, getting used to some stuff, but this was a three-pronged. This was in the morning. This is in pre-market, and it was you can see we're running into the secondary of the of our distribution, and notice that this is the liquidity divergence there, and that's when I posted in X that I said, listen, I was like, we're going to have a pullback here, and it's going to be pretty tough because of these divergences, and plus we had a divergence on our duration indicator. And from there, by the time I put it out, I think the ES was at 68.20, and it pretty much went straight down to 67, 66. So you're talking about almost 60 points in just from these indicators. And I wasn't really worried at all, because if we went up, we were pretty maxed out on a lot of things as far as with the divergences, with our liquidity pressure indicator, or even the divergences. And running into this resistance, I just, I was underwater by a couple points here and there, but it didn't really faze me too much. And I actually closed it a little bit early. I closed it at the 67.90. I could have, well, at least half of them. And then I closed another half when we came down here. But whatever, it was a great trade no matter what. And I didn't even trade this part, but that's where I want to go to now let's go over to our regular charts, and this is a spiders. So this is our longer term chart. This is our 4-hour chart. This is important support right here. If they lose this, I'm going to be a little bit worried, because the next stop is going to be down at the 652 level. And we're talking about another 100 points below where these lows were here. But you can see that we had, like, even during this drop right here, I'm going to make this a little bit bigger and wider. And you can see right here, as the spiders was dropping, notice what was happening here. We have the accumulation stayed up here. So this means every time we're getting these drops, and you see these aqua candles, what they mean is that yes, price is going down, but there's more say volume that's happening towards the ask than there is at the bid. So it's telling us that there's not panic selling. When you have this red, then it's panic selling. When you have green, it's strong buying. But when you get the purples, this means that they're actually selling at the bid on the way up. So price is moving up, and the volume part is being sold at the bid. It's a divergence at the money flow. And you can see as we went, it came here, and from there, once we got down, this is when the institution started buying. We held this support, and right now, I have a feeling my take on it is that we're gonna have some type of short-term little pullback. And again, same reason. This is a 15-minute chart on the SPY. I mean, this is the trade that I took for the portfolio, and I actually got in a little early on it. It was like, but again, I wasn't stressed for some reason. Just because when you have liquidity coming this way, that this is not institutional buying. This is either shorts getting squeezed, or it's just retail traders. And we know when they're going to run out of room. Once they run out of steam, we pretty much go straight down. So my first entry was actually at the 681. 40 or 50, and it went down, and then it shot up. And again, I was good. If it went up to our GAN line, I was going to just add it at a different line and continue, because this was the next move coming down, and we had our liquidity telling us that, where this is going straight down as price was going up, and you really just wait for that reversal, and that's what happened. And it was an awesome trade. I had the 681s. I closed them at the 677. I think it was I could have gotten a little bit more, but the thing is, this is our target. This is when you get those divergences like we have here. So what happens is, here's where the divergence started, where we went down and then up. So this is our downside target, and you can see what I normally do, because I don't really believe, I'm not going to try to miss an exit or an entry from a wick or anything like that. So you want to look at where's the support. And right here, it was like 675.85. We just about hit it. So this was always the target on this. It was coming down here, and it worked out. But this is the reason why I believe we're probably going to head into our accumulation zone or possibly test these lows. And we have a lot of duration on our 15-minute chart here. So it could come and then go back up. And then what's going to happen, it's just going to set up a larger sell signal with divergences. And that's where, we could just be stuck in this range right now where we're obviously we made a little bit of a lower low, but right now we've just been ping-ponging up and down. So I don't, yes, I know that geopolitical issues are always a concern, and they are to me too, but I just think they're going to be fixed. I'm not looking at this really interrupting the market, but even if we get these blips, what you have to understand is that war means that money's going to come from all over the world to the people that have the reserve currency, and that's us, and it's going to go into the stock market. It's going to go into whatever asset we have because they don't want to have it in their own currency. It's just the way war works, and whoever has the reserve currency. So even, if something like happens, I believe that we're in a bull market for quite some time, and I do believe we're going to get some pretty good hiccups here and there. But right now, I think that we're hovering 3% off the all-time highs or something like that. Nothing really major, and it's just the volatility is what's driving people crazy. So anyway, if we do see follow through on the downside, let's take a look at where support is, and this is actually just price support right here, but if we're looking at where the accumulation, it starts at 673 down to the 670, and then it comes down to the 666. And the problem with this is if they lose it, then what we have to do is start looking at where are the targets that this distribution is causing, and you can see it's down 663 and 657. And then down to the 650. So that's why watching this line is going to be really, really important. If the bulls lose it, obviously this is the last line in the sand, but then we got to start saying, all right, we're coming down to the 656 or 657, and then down to the 651. So that's why you get to build your landscape on this, your trading landscape, where this is the line, and this is the first. Well, this is where you want to see buyers step in. This is the line in the sand, and then this is panic below there. So that's really what I'm looking at. But you can see even on this drop right here, we see liquidity moving up. So again, as much as there's a lot of duration on the 15-minute chart here, and we actually do have some bullish divergences on liquidity, but this could change at the open. We have to wait and see on it. But I wouldn't be surprised to see us just chop around and not really. If we're going to pick a direction, I think we head down to this 672, 670 level. Give it a test, and then from there probably move higher. So let's take a look at IWM. This was another one. It was work, but it worked out. But again, let's just look at what happened. So here's our decline right here. Look what money our liquidity was doing. It was going up during this time right here. So you have not really that much of a bullish divergence here, but you can see it started even during this big red candle right here. It was starting to move up. And again, it has a lot of duration on the 60-minute chart, but this is obviously going to be the line, what's going to be pretty tough for them to get through. And that's the 250, say the 260 level. If they do, then we're popping up to the 263, and I believe we'll get through there and then start testing the all-time highs. But right now, they have their work cut out for them, and this is probably the reason why. Is again this trade, even though we were underwater, I first took 255s because I really thought that this was the area that they were going to see a reversal, because we were in the second part of our primary, and liquidity was just going straight down. So when it popped up, I ended up taking the 256s, and it even went out higher than that, almost right into our GAN line, and then we got this sell signal, and that was it. IWM went from 257 down to 252 or 253. We made money on the 256s and the 257s. I'm at 256 and 255, so it a nice trade, but I'm not going to lie to you. There was a little bit of what the heck is going on here, because the small caps have a mind of their own, and sometimes when they pick a direction, they don't stop. So this one was a little bit more stressful than the SPY trade. So if we're going to continue lower, where's our support levels? Right here. You have price support where it bounced at 250, 261. Now we have our primary accumulation. That's at the 250.95. 250, 249.50, and then we have our last lines in the sand right here, and that's the 247.45 and the 247.26. So these would be the areas that we look to that we want them to support to hold. If we have bullish divergences on liquidity, then I'll be looking to take a long trade and probably come up and test these highs again. So like I said, running without this liquidity indicator, I feel like you're running blind, because you're seeing what's happening with price as what institutions are doing, and I'm surprised I've been able to trade without it like this, but it's one of the best things I've used in a long time. And when you combine it with our accumulation distribution levels, and then our accumulation buy sell signals, I just took it off because there's a lot of signals out there. But again, that's another little learning curve on this, is that you have to learn when to ignore signals. And when you're up here, you ignore this signal here, because one, you have bearish divergences on liquidity. Two, we're already heading down on our with our duration, and in right here you just ignore it. You wait for a buy signal, because it's just it's going down, but we're giving these little buys right there. So you ignore them, and you just take the short trade on this. And again, here now you can start looking at it, but I mean it's still just going flat. So I ignore those. I want to see the big duration ones, even though that's when I got short, thinking that we were going to get a nice little pullback, and we kept going up on it. But in any case, when you combine them all together, it really is a fantastic tool. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.